My name is Salome Wanja. I'm a mom. Actually, my boys are here today, and I'm a wife. My husband is here today because we are heading to the airport as soon as we leave here. They are going to Kenya. And I'm also a community organizer who's very passionate about our community and educating our communities on any matters that will help us and transform our lives. Like one of the speakers said over here, let's work together to transform our lives. We shouldn't continue to do the same, status quo, things that are not working. So life insurance is very broad, and I have a very short period of time to talk today. So I'm going to be very quick, and I have put some papers on the tables over there. There's a QR code you can scan and reach out to me after this. So again, I'm going to be brief so that I can respect the time over here. Now, when most of us think of life insurance, we usually think about death. And we're just thinking, when I pass away, my family will get the benefits. And just like the lawyer said, I have spoken to some people who have told me there's no way I'm getting life insurance. If I pass on and my family is given 100K, they're going to drink themselves to death. So whatever he said is actually true. But again, you can set up a will and trust so that that money goes somewhere else. So in general, life insurance, there's more to it than just death. You can have life insurance so that you have protection, peace of mind, and be able to leave a legacy. I have a question for each of you today. If something happened tomorrow and say you passed away, would your family be okay? Would they be able to pay the bills, the mortgage? Or would they maybe end up on the streets? So it's something that we need to think about to protect our families. So some of the topics I'm going to talk about are going to be just basics of life insurance. And I thought one of the things I should do is just explain the basics, like what is a term insurance? A term insurance is an insurance you have for a period of time, like say 10 years, 20 years, 30 years. It's when that time ends, then that insurance ends. Most of us have a term life insurance, either with your job or we bought one where it's going to be ending in a couple of years. And I was talking to an old friend over here today. He got like a term insurance 30 years ago. It's probably going to end when he's 60. And then what happens after that? So that's a term policy. Think of it like renting insurance. A permanent policy is a policy that you get for life. That is like a whole life IUL policy. You have that covered for your life. So those are a little bit more expensive. But again, think about it like owning a house. It's more expensive, but when you finish paying for it for the 20 years, 30 years, you have it for life. And we have permanent policies where you can pay for them for a period of time. And one of the tips I have for you guys is you can start with a term policy, which again is for like 10, 20, 30 years, with the goal of converting that to a permanent policy. So you don't have to start with the expensive policy. You can start with one that is cheaper, and then when you have the funds, you can convert to a permanent policy. Then the next thing I want to talk about is living benefits. And this is something that I want our community to take to heart. Today, if you get sick, what would happen to you? How many of us in this room, by a show of hand, know somebody who has had a heart attack, stroke, or cancer? By a show of hand. I think almost all of us in the room, right? What happens to you when you have any of those ailments? Are you able to work? Are you able to work? Probably not. Do the bills stop? The bills don't stop. You still have to pay the bills. Sometimes you lose your job, right? But the bills are still coming. What happens to you? What happens to your family? Right? I want us to think about that. There is no reason why we shouldn't plan strategically so that we are able to take care of ourselves. So when you have an insurance that has living benefits, you are able to accelerate your policy so that you get paid a portion of your policy ahead of time. If you end up critically ill with a heart attack, stroke, cancer, you can accelerate your benefits. If you have a chronic illness where you're not able to perform 2 activities of daily living, you can accelerate your benefits again. Or if you're in a car accident where you're paralyzed and cannot work, instead of having to go and do a GoFundMe, you can accelerate your policy so that you have peace of mind instead of panicking because you don't know where you're going to pay your bills from. Now, I put a flyer on the table over there that has like a chart, and it kind of gives you an idea of how much it costs to buy a term policy. It's the one with the little table over here. And the reason I usually put that information is so that you can see how cheap it is to buy a policy. And you can get yourself, again, a policy for $100,000. If you are a female, it's like $21. If you're male are a little bit more expensive. That's only $25. For that amount, you can buy yourself peace of mind. I usually call it opening yourself a Me Fund Me account. Instead of relying on GoFundMe accounts to go and get money when something happens, open a Me Fund Me account with a term policy. The amounts you're seeing over there, again, are a term policy, which is, again, for 10, 20, 30 years. It's just for a temporary period of time. Now, the next thing I want to talk about life insurance is a vehicle that many of us did not know, especially when we came over here, which is IUL policies. IUL policies are indexed universal life insurance policies. These are policies that have a cash value in them, where a portion of the money that you're paying goes to like a cash bucket. That money grows tax-free, and it also, you can withdraw that money tax-free. So you're not paying for it taxes as it's growing, and you're not paying taxes when you're withdrawing. And then, because it's indexed, it has market protection, meaning the money that is in your bucket today would never go down. Even if the stock market goes to negative 20, 30, depending on what's going on, your account is set. And remember, Warren Buffett says the first rule of investing is never lose your money. And the second rule is what? Remember rule number 1. So when you put your money somewhere, make sure that you're investing in a vehicle that is safe. Recently, we've had instances where people are putting money in some vehicles that where they were promised so many things, but we didn't do our research. So make sure that you're doing your research. Again, this is a life insurance policy, but it has an aspect of it where you can put some of your money to grow for you. Again, because it's an insurance policy, it protects you in case you pass away too soon, in case you become ill, like we talked about living benefits. Remember that when you live here, and say you are blessed and you live to, say, like about 100 years old, and you're worried about running out of money. So an IUL policy gives you all those benefits in one vehicle. Under the same bucket, we have IULs for kids. Why would you want to buy insurance for your child? And they are so young, right? There's pretty much no reason. However, you can buy an IUL policy which you use as a vehicle for saving for your kids' college. This is money that you can use for anything, be it for their college tuition, or you can use it to buy their first car, or you can use it for their first business, their first home, and so on and so forth. And because you're buying a kids' policy, which again are so cheap, most of the money that you're paying into the policy goes into a cash bucket, and it grows, again, remember, tax-free. And when you're withdrawing that money, it's still tax-free. For example, my nephew just graduated high school the other day, and they used his IUL policy to purchase his first car. So that's how you can apply money that you put in an IUL. So there's, again, no reason why we shouldn't buy policies for our kids. In fact, you should actually start early, because kids' policies are super cheap, and you're able to protect them at the same time. So a couple of Q&As or things that come up often is, how much coverage do I need? That is personal depending on what your life circumstances is, but typically you want to think about 10 to 20 times your annual income. Another question is, what if I don't qualify? When you apply for this type of insurance because of the living benefits, they have to do what they call medical underwriting, where they check your information, medical information through a database. And if you are too risky, then they may not insure you. So if you don't qualify, what should you do? So there are several options, including maybe finding a coverage with another policy, or you can look into other vehicles like annuities, and even look into final expense so that should something happen, then your family is not left out there. Another question is, I have work insurance. Is that enough? Somewhat. Because work insurance is a term policy. It's only as good as the time that you're there. If you get laid off, if you lose your job for whatever reason, then you have no coverage. So make sure you have yourself a small policy on the side that you can actually use to protect yourself and your family. And remember, living benefits, meaning you can access it while you're still alive. And then another question is, can I get covered if I don't have citizenship? And the answer is yes. Many carriers usually insure people who are not citizens, as long as you have the proper documentation and you are truthful and say that I still don't have my documents. We can be able to put in the information saying that your policy is still, your process is still ongoing. So again, if you don't have papers, that doesn't mean that you cannot get policy. So I'm gonna wrap up my presentation today by saying knowledge is potential power. Action is real power. So whatever we are learning today from all these great speakers, let's make sure that we put it into action. As I said, many of us can get a small policy, like about 100,000 K, and that can cover you for maybe 20 to 80 K. Why should we continue to rely on GoFundMe accounts and you know how many we have day after day, when you can just contribute $30 to your policy or $60 to your policy every month? How about you pay yourself first, open that GoFundMe account for yourself? And the next thing I want to say is modern life insurance gives you protection, wealth, and legacy. So let's stop passing bills to our kids. Instead, pass blessings to them. Thank you so much.